What's going on over in Colorado Springs?
Oh, it's a dreary day here, man. It's that kind of depressing weather. I'm super tired. It's been raining all day, and it doesn't even rain here that much. So, it's better than snow or sleet, so I'll take it.
Hey, warmer weather's coming, man. That's all I know. Unless you're in Australia, people down there got cold weather coming, which I
Right?
found out. I was in the Navy and was down there in July when it was snowing, and that surprised the hell out of me.
Well, I think that's why they say Christmas in July, because the southern hemisphere is in Christmas time, like their weather, their winters in that time frame.
Yeah, it was anyway. So enough about my Navy days back in the 1990s. Uh,
Oh.
anyway, so yeah, I'm Russ. I got this channel, Dapper Dividends here, my Dapper Dividends, whatever you want to call it, and we're gonna just talk about some of the stuff we've bought this week. I was trying to think what could be helpful for newer investors or what people might find interesting. So I thought, we'll talk about what we bought last week. And before we do that, I'm going to beat you to the punch, Joe. He said he wanted me to introduce myself to some of his subs. So, really quickly, let's see how fast I can do this. I can be rather wordy at times, but I've been a pretty strict dividend investor since about mid 2018. And that was after I tried penny stock trading, all the get rich quick,
Mhm.
penny stocks that were going to blow up. I took some Udemy courses on swing trading, which didn't work out too well because when I hit those points to sell, some of the stocks kept going up, and I didn't like that. But one in particular was Helios and Matheson. Do you remember Helios and Matheson?
I don't even know what you're talking about.
They owned MoviePass. So MoviePass was a thing where,
Oh, yeah, yeah,
yeah,
yeah.
for a flat fee, you could see as many movies as you wanted. Now they were a data analytics firm out of New York,
Uh-huh.
and they bought MoviePass, so completely had no business buying it, and it completely bankrupted the
Yep.
company. But as they were going down, I kept putting more money in because I was listening to management saying, "No, this is okay. We're going to turn around. It's a bump in the road." So I kept throwing more money in, losing sleep. And
Hmm.
one night, after just nights of losing sleep, wanting to know if it was going to go up, and checking in the pre-market, which I think is like 3:30 a.m. here where I'm at. So I would be waking up at like 3:30 in the morning, looking at my phone, trying to see what they were doing. And as just one day, I said, you know what, I can't do this. I'm losing sleep, and there's got to be a better way. And my grandfather was a dividend not investor, but he invested in companies that paid dividends. And I remember him telling me that he would get dividends from like Walmart and Coca-Cola and Disney. So there I was, 4 o'clock in the morning, Googled dividend investing. That started the rabbit hole. And here we are today, almost 5 years later of being a dividend investor. I'm trying to just share that with everybody. So I think I kept that kind of quick. What do you think?
Oh, for sure. You did great. Lot shorter than when I introduced myself to your guys.
That's the brief version. And yeah, so where do you want to go from here? You want to talk? I wanted to talk about yield curve inversion because
Okay.
I want to know what you do.
Sure.
That for those of you that don't know, the 2 year and the 10 year is kind of a benchmark that a lot of people look at because every time is I don't want to mess this up. The 2 year has inverted with the 10 year treasury. There's I think 98% of the time in the next year or 2 years there's been a recession. So almost 100% of the time a recession follows, relatively soon. So investors like Warren Buffett, they sit on their cash. So do you pay any attention to the yield curve? Are you waiting for a recession? Do you sit in cash? What do you do?
Yeah, so great question. First off, it has not inverted yet, correct? It's been
No,
close.
it
It
did
did.
last week. It did. Yeah, yeah. I know
Okay.
because I googled it today to make sure to make
Okay.
sure. And yeah,
So when I last looked at it, I can't remember what day it was, but it was really, really close. But I didn't think it dipped below it. But now I know it did. So
you keep talking. I'll look it up here.
yeah, yeah.
Cover for
So
me.
with that being said, like, and I don't think it's 98%. I think it's been 100%. We've always gone into recession since then. Um, So, what am I doing? And I think you're right too. I think it's 12 to 18 months or something like that after the 210 dips is when we have proven 100% go into recession. I think it's been 7 out of 7 times this has happened. Um, So what am I doing? I don't carry cash that much at all. I have a little money set aside, just in case something crazy happens. However, I throw money into super safe dividend stocks, and one of the dividend stocks I've been buying lately, started last week, has actually been BlackRock.
Oh,
They have
really?
yeah, they
BlackRock.
have a
Okay.
2.54% dividend, which is decent, and it's down about 18% or so year to date, and it's just a super stable stock that I like.
So
So
I'm going to cut you off really
yeah,
quick. I hope I got this on the screen. So there it is
yep,
from
yep.
Friday on Yahoo Finance. So the yield curve did indeed invert.
Okay.
And yeah, so it ended 6 basis points below the 2 year. So yeah, so it did invert. And let me stop sharing that. There we go. I stopped sharing it and we're back. The old guy's
So
getting the hang of this. I'm
with
sorry.
that, yeah.
Go ahead.
With that being said, if it's happened 7 out of 7 times, what would make this any different? You know. Um, so I think once a time starts getting closer and there's more and more signs, I probably will start leaning more towards cash. But right now, April is statistically the best month, I think, for returns out of the whole entire year. Does that mean this April will be that case? I don't know. Maybe not, because there's a lot of tension and fear out there right now. But maybe as the year gets on later, I will start hoarding some cash, right? But right now, I'm not doing that.
Yeah, it's, that's kind of how I feel. I don't like to sit in cash because, 95% of what I buy are dividend companies, dividend stocks. So I always feel like I can start getting that money working.
Yeah.
But obviously there's that, think like, yeah, we could wait for a better price. But,
Mm-hmm.
it's that kind of that fear and greed thing too. But honestly, I don't know, in 10 years, if I buy that share of PepsiCo, am I really going to remember about the 2 year and the 10 year or where the Dow was at or anything? Chances are I probably won't.
Right.
So it's yeah, it's a good point. Okay, cool. So I'm not sitting on a lot of cash either, although I do have some because my Altria covered call was assigned and I'm sitting on a little bit of cash there. But so you talked about buying BlackRock. So
Yeah.
just wrap it up. Just tell us what else you bought last week.
All right. So, if you don't mind, I'll share with you what I bought, what I sold, and what I'm shorting, if that's okay with you.
Ooh, shorting. I like it. Yeah, yeah.
All right. So I'm signing in right now, and I'll just go through really quickly. And if I remember the price, I'll share it as well. But last week,
Shorting by the way,
yeah,
is when you're betting that a stock will go down. So when that stock price goes down, you make money. And then the inverse, if it starts going up, you're gonna lose money.
yeah, and
Proper
it's a
English.
lot more risk shorting the stock than, of course, buying the stock because
Now,
yeah.
are you doing that through a put?
So I'm shorting it. So when I want to stop shorting, I'll just buy to cover it.
Okay. So yeah, so that's something I'm not familiar with. Anytime
Okay.
I've shorted, it's always been through a put
So
option.
so right now, last week, I'm just going through the list real quick. What I bought, sold, and shorted. Last week, I sold Robin Hood at just over 16, right around $16.18. I trimmed some SoFi at 10.15. I trimmed some Facebook at 2.29. However, I will be buying back Facebook if it starts to dip a little bit more.
Okay. Okay.
Because I'm a big fan of Facebook, but I just bought so much Facebook. I do not try to exceed more than 5% of my net worth into one position. And Facebook, I have like 13% right now. I just been loading it up, so I trimmed quite a bit. So I was happy about that. It had a nice bounce from the 180s, and we talked about this our last month when we did this call.
Mm-hmm.
I said Facebook 180 to 200 is a sweet spot, and I think you said you bought some. I'm not sure what
I still have it. I bought one share at 199,
okay.
and I got it. I can't lie. I've been looking. I think I'm up like 12 or 13%, and I'm starting to get like, man, I should just take that, and I can roll that into. I'm getting close to just taking the profit on it.
Sure. And if you're not a huge believer in it, then definitely sell it. And I mean,
I think it's risky, man. I don't know.
Oh, yeah.
I love. Yeah, I love crypto space. We've texted about crypto. I think there's big things, but if the metaverse, the way Facebook is investing in it. I don't know. It's a risk for them, but they took a
Mhm.
risk when they bought Instagram, and that, that paid off.
Absolutely. And Facebook, I'm not saying there's no risk. There's a ton of risk over the next 2 to 3 quarters and maybe longer if we go into recession, right? However, I mean, Facebook is the number one ad revenue. Where else can you go? YouTube, Google, right?
Yeah.
I mean, Facebook is not going to be going away anytime soon.
I do work with a funny story. I work with somebody that told me that through the grapevine, I should have just shortened this, that they heard one of their friends' kids ask them about Bookface. And I think the kid was like 8 or 9, asking his dad, what's Bookface? He meant
Uh,
Facebook.
yeah, yeah,
So,
yeah.
and there's that thing that, right? I think we covered this, that I think older people use Facebook,
Yeah,
but who has the money,
right.
the older people.
Absolutely. And then in all honesty, like ad revenue, who's more likely going to make money off the ad revenue? A 13-year-old watching something on Facebook or someone our age that's on Facebook? Like, we're the ones that are going to be buying what we see that's advertised, right? These 12 and 13-year-olds are not going to be spending their money on things that they see. So just like in YouTube world, your ad revenue, like the financial world, they get a ton more ad revenue than someone like that's promoting like the kid YouTube stuff that my 2-year-old watches, It's
Oh
just a
God, yeah,
different.
yeah. They get millions of views and they get a few bucks. It's
Yeah,
just, yeah.
yeah. But let me finish real quick and then we can get
Yep.
to you. I bought some Adobe last week. Let's see. I
They
bought
pay a
some Shop.
dividend, not a big one.
Do
Adobe,
they?
I know they pay a small dividend. Yeah,
I
yeah.
didn't know that. Okay.
Unless I'm wrong. Keep talking. I'll just go. I won't put it on the
And
screen.
they may. I just don't. I did not buy it for the dividend. So if they do, that's just a bonus. Shopify I bought. I just covered BlackRock. This one I'm a little nervous about. I just bought a little bit, and I'm expecting it to go down. But ARK K, I nibbled in that a little bit last week.
No,
So that
Adobe does not pay a dividend. They did in
okay,
2005. So, hey, I was close. I was just, 15 years off, but they
right?
did pay a dividend. So I'm not crazy.
Well,
So
you know what?
BlackRock, you bought
Yeah, yeah.
BlackRock. I like it. I like it.
So I've been shorting off and on over the last 3 or 4 weeks, Lockheed Martin and USO, which is a oil ETF. And every week I've always sold my positions, no matter if I'm up a lot or down, on a Friday, just because I do not want to go into the weekend with the war that's going on and something
Yep.
crazy happening and Monday opening up and the stock being up 20%.
Sure.
And since I'm
Sure.
shorting it, I'd be down 20% or whatever.
Yeah.
But this last week, I kept my Lockheed Martin and shorting it over the weekend. So we'll see how that plays out. But I've been doing some nice little swings on that, and it's not a ton. It's anywhere from 2 to 5% on a weekly basis that I'm making on shorting those. So again, not a ton, but it's enough to make me happy. I guess I
So
would say.
is that naked shorting? Is that what that is you're doing?
Now, can you explain naked shorting to me?
I think that's when you don't own the shares.
Oh
See,
yeah,
I've never done it. So you don't own the shares, or you're
no,
not like trying to buy them. Like you're borrowing the shares, right? And
yes,
then
yeah,
you have to
exactly.
sell them back. Yeah.
Yep. And then
Yeah.
once when it gets to a price that I'm okay with or happy with, or I just want to cut my losses, then I'll buy to cover, and that's how it
I
will
don't. I
go out.
man, I wouldn't have the gut for that. Oh my god, I would lie awake at night. See, now for you, and this is perfect for anybody listening. If you're able to sleep well at night while you're doing this, that is all that matters. But for me, I'd probably have a bleeding ulcer by the time I was through. So,
Well,
um,
well, let me. I take healthy risks. With that being said, um, again, I don't know anything about this war. Is it closer to being over than it not? I don't know. But I am looking at the charts of Lockheed Martin, and it's a great company for long-term investors. But as soon as this war starts to be rumored to be over,
yeah.
it's going to drop easy double digits, 10%. Easy.
Yeah, and it's funny you say that because I think my average on Lockheed is in the 330s or 340s, so it's down there. But I even thought about when it was at what did it get to, like the 460s, 450s, 470s, somewhere around there. I
It's like
even thought like I thought about selling, and then
Yeah.
because I know eventually it's going to drop, but um, yeah, I don't think I could do it. I don't know. I can't do it. I can't bring myself to sell it. Look at Steve's. All right, it says don't naked short. Yeah. So Steve just brought up. He finished my thought for me because I get
Uh-huh.
sidetracked by a million shiny things. Is do you have any downside protection? Because obviously a stock can keep
Yeah.
going up forever. So there for people that are shorting, there's literally no floor, right? So
So
do
yeah.
you?
So with what I'm doing right now, I have no protection. And that's just me going off the charts. Like right now, Lockheed Martin's sitting at 446. The 52-week high on Lockheed Martin's 480.
Okay.
So that's not. Is it going to break through that? Through, and that's only 4.5% away. Is it going to break through the 52-week high? And I believe that's all-time high. Is it going
Yeah.
to break through that? The only way I think it's going to break through that is if this war gets ramped up, if Russia starts using nuclear war, whatever they're called, nuclear weapons, or if the
Yeah.
U.S. like has to get involved, then Lockheed
If
Martin's
yeah.
definitely going to go up. But
If they're using nuclear weapons, then the U.S. That's probably the start of World War III,
yeah, and then and
and
then in all
then we're all
honesty,
in a world of hurt. I mean,
yeah, in
that's
all honesty, I'm not going to be worried about Lockheed Martin because that might jump 10, 20%, but our stocks might drop 20,
yeah,
30% overnight if we get involved
yeah.
with World War III. So I have no protection, but typically if it was a risky, and I don't like to play risky, but if it was riskier, I would have a stop loss on it.
Yeah. Hey, dude, I just noticed I got spammed. I'm
I
making
see
it in the
that.
world, Ma. Look at me. Look at. I'm going to show this. Look at
Look
naked
at
dad
you.
H online strips. I'm making it. I'm getting somewhere. I'm getting
You're legit,
spammers.
bro. You're legit.
Uh-oh. Now, how do I get back to my other thing I had up about the Q&A following? It will, people. It will. Hold on. Let me do this. Hey, here it comes. Boo! Look at that. I'm getting the hang of this. So, are you done? I didn't want to cut you off.
I'm good.
I
I'm
get a
good.
little goofy here. It's Sunday night. I'm entertaining myself.
There you
Hopefully,
go.
some people too. Um, yeah, BlackRock. That is not. No, I'm thinking of Blackstone. That was really getting into the real estate, right? They were getting into.
I think
Um,
BlackRock was getting into real estate. Like, I'm pretty sure it's BlackRock that recently bought like
maybe it
a
was
bunch of,
BlackRock.
but they bought like bunch of Zillow homes for like 60 cents to the dollar. Because Zillow just
Yeah.
wanted to get out of it and cut their losses. So BlackRock got a huge steep discount because they bought, I don't know how many homes, but I think it's in the thousands of homes.
What do you think about Zillow? God, see, I could just do this all night. Do you have any interest in Zillow? Because I don't know. I hear something like that. I think it could be an opportunity that I
Mhm.
know their stock cratered because they were trying to
Yep.
use their algorithm to buy homes and it just did not work out. But I don't know. That could be a turnaround play. Would you ever put anything into Zillow?
Um, I've thought about it a lot. It's jumped. I think it's jumped a lot lately. Of course, everything's jumped up. Like at least everything I'm invested in has jumped up anywhere from 10 to 40%. In 2 weeks.
Yeah. Yeah.
So Zillow long term, I like long term, but I have so many positions right now because I think there's so many. There were so much better plays out there over these last 3 months that I put a ton of money into, and now I'm just letting it ride out and trimming positions that I'm overexposed into. So that's where I'm at, and I'm throwing money again into safer stocks like BlackRock for a potential
They're
downside.
safe.
Because 6 weeks from now, man, we have earnings coming up again,
Mm.
and I just made a video of this, and I don't think that people are really trying to aren't talking about this yet. Like so Adobe, they just talked about how they forecast down because of they're out of Russia now, right? Their
Mhm.
stock dropped 10% off that news. Adobe really does not rely on Russia's economy at all. Right? There's some top companies in America. There's top 10 companies I made a video on that rely heavily on Russia's
Yep.
revenue. Like Microsoft's number one. Bro, like what's gonna happen? Is Microsoft they're a huge company, so they could overcome it, but could they overcome it right now? I don't know.
Oh God, I think they may be the healthiest company in the entire stock market. I don't know. I look at their numbers and every earnings, it's just
Yeah.
mind blowing. it's crazy how much money they make and how well that company is run. So I think Microsoft would be okay.
Yeah, I think long term for sure. But let's say they lose a few $1 billion over the last couple of months because they don't have any business in one of the largest countries in the world, investors aren't going to like to hear that, and by default, they're going to most likely like most likely get hurt a little bit. I would assume, even if it's for a few days, they could rebound in a few days later, like Adobe rebounded a few days later, right? But
Yeah,
I don't know. That's
no,
just a worry of mine right now. I'm more worried about that than the Fed rate right now.
yeah, I don't know that we could talk. They're jerking the economy around. They're on the gas and the brake and the gas and the brake. And,
Right.
um, yeah, it's why I think it always comes down to trying to buy those quality companies and just quality companies, whether they pay a dividend or not. That's just something that not trying to chase. But speaking of not chasing, here I'll just get through real quick because I want to talk to some of these people we got hanging on.
For sure.
Yeah, so I won't get too deep into this. I bought in the bridge account, which is the account that's taxable, that I just wanted to get some extra cash coming in, and all of a sudden the dang thing's at over $70,000. And it just goes to show you what just every single week putting money into it does. So in that one, I bought two tranches of Intel. I bought one tranche at $49.92, and then they just dropped on Friday. I think it was Friday they dropped. So I bought some more at $47.85. I think they're a great company in the long term, and their CEO Pat Gelsinger. I did a video on that too. Look at we do videos on everything. I love it. We NVIDIA is talking about using some of Intel's foundries that they're starting to really ramp up for producing their chips. And Intel wants to start cutting into Taiwan Semiconductor and just making chips for everybody, for themselves, for competitors. And yeah, so I bought Intel. I bought a newer position, Advanced Auto Parts, at $208. They just really started ramping up their dividend pretty big. So I put that on my website. I did a blog post on that, just about a little bit of Verizon. Not a big, they don't really grow the dividend. I was going to say fastly, but frequently and fastly. That shows what my brain's like. Dude, the gears are like, it's the wrong word. So, yeah, Verizon pays like almost what? I think almost a 5% dividend yield now. And Jer Share, if you're watching, correct me on it. It could be 4, but I think it's 5. Drawing a bit of a blank here. And I bought number 94 of PepsiCo. So I'm getting close to 100 because then I can start selling covered calls on that. And funny, at 167.75. And when I do start selling covered calls on Pepsi, and for your viewers, I've been buying one share a week. And I started that 94, almost 95 weeks ago. I wanted to get to 100. So I am intending to get just an extra like $10 ish at a minimum a week. And because of Jeremy from Dividend Stockpile, he's really got me going on the weekly call option. So I used to be focused on like 30 days out and 40 days out. But as we'll see here in a minute, I'll end this up with NEO, what I've been doing. Self-directed IRA, I bought one share of URNM, which is the uranium ETF at $77. And then in the Roth, I bought 2 shares of EPD at $25.65. That's Enterprise Products Partners. And then NEO, I sold a covered call on NEO. It was only a $23 covered call for $25, and it expired on April Fool's Day last Friday. By the way, fantastic April Fool's Day video you did. Dude, it got me. I don't want to give it away, but definitely check out Joe's channel about him going from 0 to 23 million. And I was about to, well, that's it. Just check his video out. Anyway, so the NEO covered call I sold for $25. That was a week. I sold it on Monday. And of course, like usually happens with what I do, the next day, NEO popped 8%. And that covered call I sold for $25 at one point was $171. So had I waited like 24 hours, I could have probably got an extra $100 out of it. But it's all right. It came back down. I was playing the trend line. I knew there was resistance right around 23, 25. So it closed below that. But I've sold since February 15th 3 covered calls on Neo, and now I'm doing more. I've done 2 weeks in a row. $159 just from covered calls on Neo. So, do you ever sell covered calls? I wanted to ask you.
I don't, but it's just not in my wheelhouse. Maybe you can teach me how to do it. I've never attempted to do it, and when I do something like, I don't know, so I don't do them weekly, I should say. I've done some long term, like years out.
Leaps.
But I've only done that a few times too. I'm not super knowledgeable about it. I just wanted to test it out. And
well, this is the guy. This is the guy right here, Jeremy. I put him on there on the bottom. Who just said 4.91% on Verizon. So yeah, we did I don't know, 2 weeks ago. I don't think I did a video last week, but we talked about covered calls. We did a live stream about it. Yeah, I mean, it's just a pretty good way. You got to have 100 shares of a company though in order to do it. So that's a little bit of the rub.
Okay.
But yeah, so I don't know. That's it. And Jesus, look at this. 26 minutes we've been flapping our gums for. So you got anything to say before we
we can let it flow. We can answer some questions. We can
Look at that. I put you on top. I'm playing with them. I'm moving the mouse here, and I saw the little hand appeared. The cursor changed to a hand, and I was like, "Oh, what happens?" I clicked you, and I can move you around. So, anyway, people, you see what happens here? It's this attention span. But who has questions? All right, let's go back in time here real quick. Yes, Jeremy. Again, I love it. Hey, man, thank you. I'm really enjoying it because I used to get stuck on covered calls. I would be looking out like 30 and 40 days on the covered calls, trying to look for that like really juicy premium. But now I think Warren Buffett, right, talked about it when people are looking for home runs. And it's just take those singles and doubles, like consistently hit singles and doubles. And it's almost better than somebody that hits a home run every once in a while. So that's what I've been kind of doing with that. And, that's my guy, man. He talked some sense into me. I love it. I love this community. I love what you have to share, what everybody has to share. So, hold on. Why am I not going down here? Okay, here we go. Let's see. If anybody has questions, fire away. Sunbreeze, these are options. I believe, yes, I was talking about options. No, at the end, Neo is an option. When I said Intel, Advanced Auto Parts, Verizon, Pepsi, URNM. Those were just regular, straight up buys. Sunbreeze, rapid fire. This guy's like a machine gun. Don't you have to pay long-term interest every year? Taxes, I think.
Capital gains, yeah.
Yeah, capital gains. So, I guess, I don't know if interest is the right word. I guess you might be able to look at it like that. Well, I'm getting interest from the dividends, but yeah, if it's in a taxable, you do. Joe's right. I put in every week. Yes, I do. My guy, Blue Collar Bill, he's been with the channel early on, the BCB, shorting his weight. Yeah, it's way out of my wheelhouse, and there you go. You can teach me something about it. I don't think I have the intestinal fortitude to do what you're doing. So you've got bigger brass balls than I do. But yeah, I don't know. It would be too risky for my flavor. My wife gets on me when I'm like, I should have bought Bitcoin when it was at 5,000, and she's always like, you wouldn't have bought it. You're too risk averse. It's like, yeah, damn it. You know me. Defense stocks. Yep. Everybody's talking about them because of the wars, and defense stocks do well. Oh, but actually it's because a lot of European companies, right? They're talking about ramping up their investments in their defense systems and their country's defenses. So,
and if I can touch base on that real quick,
please do.
So I made a video of this a few weeks ago, like about going, not necessarily being like a sheep. You want to go against trends as much as possible if you can. Just because everyone's talking about defense stocks right now does not mean you should be an investor in defense stocks. Just as, and I use several illustrations for this in the video. When the big virus that happened that everyone knows about from a couple of years ago, oil fell 50 to 90% in a matter of a day, right? the whole world essentially shut down. So of course we don't need oil. But if you're thinking long term with something like that, you want to buy oil stocks because eventually we're going to be driving, flying, cruising. At the time we didn't know if it was going to be 1 month or 1 year. However, we knew we would need oil again. So why not buy at steep discounts when everyone's selling? Same mindset right here that I have is I sold almost all my oil stocks and trimmed EPD significantly. March 17th, I think it was, because it was right at or it was at the 52-week highs, near 52-week highs, or almost all-time highs in some of the stocks. Oil has dropped since then. Now it's been fluctuating back and forth, but I'm still net positive. And what I was able to do with that, when I trimmed that, I was able to buy high-quality growth stocks that I really liked at the time, like Square, PayPal, Facebook, a little bit of NEO and Tesla at the time, because those were beaten down significantly. And we all know when did it flip? Like March 14th, it started to turn around for growth stocks, right?
I don't remember. I don't know the date offhand.
Yeah, I think it was like
I'll
March
take your word. You know better than I do. Yeah.
So I was really, I really like to go against trends, and sometimes it might beat me. Like I might try to outsmart myself. However, it just makes sense to me right now. Like defensive stocks, in my opinion, they will go down significantly, double digits short term if this war ends soon. And why is it not going to end soon? I think Russia and Ukraine are going to come to some kind of resolution this month in April.
You're right. You're right. I mean, as soon as there's a whisper of peace, I expect all the defense stocks, like you just pointed out, to just come way the hell down.
And everyone's buying them like crazy, and everyone's buying oil like crazy over this last 2 months. And people buy what they hear, right? When they're watching CNBC News or Bloomberg, like that's the hot topic right now. So everyone's buying it, just like everyone was buying Bitcoin at $19,000 in 2017 or 2018, because that was the hot topic at the time. And people tend to get burned significantly when they have the FOMO, right? Like it bothers me so much how these news stations like play with our minds, and they really set people up for not success. And it's been proven time over time that happens.
Nice. Yeah, I agree with you. I agree. And when I bought EPD, I think I bought 2 or 3 shares. So it's not a lot, and it's just adding up a little bit because I still the dividend yield is still, I think, over north of 5%. So
it's 7.5, I think, for EPD, and that's the one oil stock that I trimmed. I didn't sell out of. Yeah. I saw a lot of EPD because their dividends awesome, and they also have a natural gas aspect that we'll lean on as well.
Yeah. Let's see. Sunbreeze again. How much do you need to put in a dividend stock? Every week, every second week, once a month? Honestly, I think whenever you can. Just whenever you can. And I'm doing an experiment, like I said, with PepsiCo. And I'm also going against the grain because, and I've said it before, I remember buying a share at like 141. And I said, this is kind of crazy. I never would have bought here if I wasn't doing this experiment, because it's I think it was even an all-time high then, or it was close to it. I said, this is just so overpriced, but I'm going to do it just to see what happens. And here we are. It was at like 176 at one point. So it just goes to show you don't know what happens. So yeah, if you want to hold the stock forever, I mean, you can try to be like Big Warren B and wait for it to pull back. But if it's at a decent price and it's not stupidly overpriced like Pepsi was when I bought it 175, I would say just buy, like whenever you can buy, and reinvest those dividends.
So for me, Russ, I'm not a huge dividend investor, although I do have about 10 or 11 dividend stocks. If I want to throw money into a dividend, I tend to throw money into the one that has the best valuation at the time, because I only own the dividend stocks that I absolutely love. So for me, I kind of play them against each other, and I pick the best winner at the time.
Yeah. So I keep seeing these the spammers, and check this out. I got a little option here. Everybody, you're learning with me. We're learning something new. It says I can block the user on YouTube or put them in timeout, or add to a block list and restream chat. I think I'll block it on YouTube. I wonder if it goes away. Anyway, and then I'll put it in YouTube. So they're blocked and in timeout.
Well, tell them to subscribe first, and then.
Yeah. All right, I'm losing my train of thought here. Let's see. Steve C wanted to see if I could look at IBM on Simply Safe and give my opinion. Um, I guess I can pull that up real quick. I don't know. Hey, Ryan Williams says, "What's up?" Hey, you want to say something? You got something to say? Like, for give me 30 seconds while I pull this up, and then
Sure. What's up? Well, first of all, what's up, Ryan? We wish we had you on here today. He's a popular guy and had other plans. Otherwise, he was going to be on the chat with us today. But we'll catch you soon.
his wife's birthday. Like, that's an excuse.
Man, she's got how many birthdays does she have? Come on. Where's your priorities? Well, happy birthday, Mrs. Williams. So IBM, like, I guess I get like, I feel like their PE, is their PE like around 15, or am I wrong with that?
I got it. I'm pulling up here. All right, here we go. So they are, let's see. So they got a dividend safety score of 65, and I'll give my opinion at the very end. Dividend is 5%, 5.04. And let's go down here a little bit. Where's their payout ratio? Yeah, they've been growing the dividend for 26 years. And sorry if I'm making anyone sick with this scrolling. Their PE is 13, which is actually above. So check that out. Their 5-year average is 10.9. So their PE is above, and their dividend yield is slightly above the 5-year average. And they're right kind of in the middle of their 52-week range. Now, I don't think I was using Simply Safe dividends when I did some research on IBM and I sold, but it looked to me like they were taking on the exact amount of debt to pay the dividend.
Ooh.
Yeah, so I don't see it here. We're not going to that's above and beyond on this, but yeah, and their interest coverage ratio is only 5. Yeah, I ended up selling my IBM shares because I just didn't like the debt. So they, in the quarter that they were paying the dividend, when I looked at it, it whatever the number was, it looked like they had the pretty much the exact debt that they took on was the amount of the dividend. Plus, they have adjusted free cash flow, which maybe I don't fully understand that, but I really don't see any other companies that have adjusted free cash flow, because that's just supposed to be like a rock hard number, the free cash flow. So yeah, I don't particularly like them. I know they spun off Kyndryl, which I sold Kyndryl, and I just think that I don't know how to say it politely, but I would not be surprised if they cut their dividend anytime in the near future. So put it that way. And because of that, I just didn't have a good gut feeling, so I got out of 3M or 3M. I'm still in 3M. Boy, that was a Freudian slip.
You're out. You're out of 3M.
Where the hell did that come from?
Probably the same PE ratio, roughly.
Probably because they both end in M. That's why. IBM, 3M.
I did like IBM's acquisition a few years ago. They bought in my opinion, a better company than what they were with Red Hat.
Oh, Red Hat. Yeah, that's pretty much their only bread and butter, I think. If it wasn't for Red Hat, I think they would have definitely cut that dividend. Mm-hmm. I haven't looked at them in a while though, so if anybody has anything to say on IBM that's not right that I said or we said, let us know. All right, let's breeze through these. Sunbreeze saw Advanced Auto Parts is joining Pep Boys in the same building. That's pretty weird, and I didn't read that. I don't know if that's a local thing or what. But let's see. What do you got, Ryan? He says, what do you guys think about Lowe's right now? I have not really dug into Lowe's, but from what I know, they are super solid. And I won't pull it up. Do you know anything about Lowe's other than shopping there? I don't shop there even.
Dude, I shop at Lowe's and Home Depot on a weekly basis. It's ridiculous. It's like going there is like a hobby for me. It's like a little therapy session. If I can talk that sector broadly real quick, I know more about Home Depot than Lowe's, but they're one and the same essentially, at least in my book. If we just hit a yield curve, I think Lowe's and Home Depot have a great chance to get hurt significantly if we go into a recession. Um, I mean, let's think about this in a picture real quick. Rates are rising, right? So now homeowners aren't feeling as secure with the amount of money we could have if we wanted to get a home equity to do home projects, right? Like we're not going to go take a home equity line of credit or loan out to put a deck on or to get new carpet or floors or whatnot as easily as we would when the rates were a lot lower, right? And then people are getting tapped out. Like buyers, there's less buyers out there to get nicer homes or just starter homes right now because the homes have not dropped and the rates have risen significantly. We bought our house in December for 3.1%, and rates right now are about 5% roughly. So this home, if we bought my home right now, our mortgage would be $600 more a month if we bought just a few months later. So
yeah, it all trickles down. It all trickles down. Yeah, I pulled up Simply Safe Dividends. They give them a safety score of 93. One thing that jumps out to me, so this is something I'm really trying to focus on, is when I see this dividend yield of 1.58%, I get turned off by it. But their last dividend increase was 33%, which is pretty big. And if I want to look at their their recession sales were negative 3.3%. But they did increase that dividend during the last recession. Look at this. Now look at these numbers. Their last 20-year compound annual growth rate, 24%. Last 5 years, 18%. And then in May of 21, it was 33%. And they've been growing that dividend for 59 years. So, dude, Lowe's is definitely, look, and their PE is below the 5-year average. So now could be a good time. Their dividend yield is 1.58, so that's right about it. Their 5-year average of 1.78. And the 52-week range, they're toward the lower end of it. So nice call, Ryan. That definitely could be a super low free cash flow payout ratio. Jesus, 25%. And let's see, I just want to see if they're buying. Oh, yeah. And they're 699 million shares outstanding. So they might be due for a stock split sometime in the near future. Interesting. Yeah, I guess I would give them a thumbs up. But that's something that this is for us dividend growth investors. I know a lot of us have like a 2% or 2.5% lower threshold. And I don't know, sometimes it's so hard. Like it prevents me from investing in Apple when I see that like 0.56%, whatever it is, stupidly low, but they're going to keep growing it forever.
But the only reason Apple is that low is because they've outperformed, right? So would you rather have Apple at the current price and a 3% dividend, or Apple, like I'd rather have it grow where it's been growing and have a little dividend, just like Nvidia. Nvidia pays pennies. Their dividend's like 0.06%. However, they're just killing it. Now they've been killed lately because everything else has in that sector, kind of. But
hey, dude, come on! Look at this. You're dead nuts. 0.06%. Yeah,
nice.
I know I don't have it on the screen. I'm just taking a peek here. 0.6%, and their 5-year dividend yield average is 0.24%. So it's way below.
But what's their overall growth over the last 5 years? Like, take a look at that.
I guess I could.
That's gonna blow your mind.
I'll share it since we're on. Yeah, let's see. Let me share it. I wish there was a quicker way I have to click like 4 different tabs in order to share this. Where were we? So they've only been paying a dividend since 2012, but 6% the last 5 years, the CAGR. And it looks like they didn't grow it. So looks like since the pandemic hit, they've kept it frozen. But yeah, they had couple really big jumps right there. And since I got this up here, this is one of the reasons why I bought Advance Auto Parts. It's because their dividend yield, and everybody knows who's read my blog, is pretty stupid. Look at that. It's not sustainable to do that 50% dividend increase.
It's the ladder.
But here they are currently, I'm sorry, everybody, if you're getting sick from this guy scrolling. Their dividend yield is currently 1,119% above their 5-year average because their 5-year average is 0.24%, and they're at 2.89 now. So that's kind of one of the reasons I've been jumping into them. And I have a question for you to get your opinion on. Somebody on the blog brought up a great point and said they would never buy Advance Auto Parts, or what are the other ones? Oh, come on, help me out. They got that jingle.
You're asking me? There's Pet
Yeah.
Boys, Napa.
No. Oh my God! This always happens to me. It's gonna. 2 hours from now when I'm going to sleep, it's gonna. Oh my! I should get my daughter down here. She knows it. Oh, O'Reilly.
Oh, O'Reilly.
O'Reilly.
Oh.
Auto Parts. Oh, my kids do that, or they used to do that. I want to yell so bad to get them down here to do it. They won't come on. Where the hell was I going with this,
You said
man?
someone you had a question asking me about.
Oh, yes. What's your opinion on this? Somebody said they won't buy any of those because they think with EV coming in that it's going to wipe out all the auto parts stores, that really all they're going to be able to sell is windshield washer fluid and wiper blades. And I don't know,
well,
because think about it, there's no transmission fluid, there's no, motor oil.
There's brakes. That's so they're not wrong, but they're probably 50 years away from that.
Yeah, and that's what I think. But I'm probably gonna be, I don't know, in my 80s or something by the time that happens. But
your kid will have
as
kids.
far as until everybody's driving on an EV. But that's the thing, though. I'll probably max out at like 10 shares of Advance Auto Parts, and it'll be such a small. And who knows? 30 years from now, I'll probably have gotten all my money back anyway from dividends. But yeah, look at Jay. Yeah. Oh, but there's another one. I can't. It's not O'Reilly. It's AutoZone.
AutoZone?
Get in the zone. AutoZone. You know that, right? Do you see, dude? Your channel needs a jingle. Because it's in my head. There's, it's not as bad. So you're out in Colorado. Do you get the Cars for Kids commercials?
Well, I'm new to Colorado, only a few months, but I don't watch. I don't really watch any TV unless it's like football or basketball is on, and then I usually skip through the commercials. So I'm the worst person about commercials. I watch maybe 5 hours of TV a week, not much at all.
Well, yeah, it's in the radio.
It's radio. I have a what's it called? Siri, or what do I have? XM, yeah.
I'm trying to look it up here on YouTube.
I do listen to a lot of. I play YouTube as well when I'm like finance channels when I'm driving, just to catch up and hear what's going on throughout the day. So,
you want to see if we can, mind screw YouTube? What happens if I share my screen and I play something from YouTube while we're live streaming on YouTube? Are we gonna go down a black hole? Can we?
You gotta.
Can we do that?
Give it a shot, but you gotta block those people again. They got new ones out.
Oh my God. I thought I blocked them.
They're back.
All right, let me try this because this is the commercial. I don't even know if we'll be able to hear this or what. So anybody, I'm just having fun now. Here it is. Let's see real quick. I don't know if. Yeah, see, I can't hear anything.
I can hear.
I don't know why.
1877 Cars for Kids. KARS Cars for Kids. 1877 Cars for Kids. Donate
and it's
your
just
car
this little
today.
jingle. It's a
1877 Cars for Kids. KARS Cars.
That's a little flavor of that. Now we'll stop sharing that. Anyway, it worked then. We played YouTube while we were live streaming on YouTube. We're still here. We're all okay. I think.
Double negative.
What's a double? Did I do that? Why are they back? I'm trying to. Here, I'll add them to block list and restream chat. I don't know. We'll see. Anyway, yeah, AutoZone. Well, anybody, we'll hang out for another 10 minutes. Oh, I missed Ryan Williams. Hold on. He's got a paragraph for us to read. 20-year CAGR is no joke. Who was that for we were looking at? Oh, Lowe's. Yeah. Great points, fellas. Lowe's is in watch list. It's getting more affordable. We'll see what happens, especially with changing interest rates. Hey, you know what would be even better, Ryan, if you were here to tell us all about it.
I mean, so
next time.
Back to Lowe's, I like it short term. I like it for spring. Like that's when I make a ton of money. But with a recession coming, that's one of the first people that get hurt, right? Like those kind of department stores, we don't need to upgrade necessarily, especially during a recession. Like that's one of the first things that go, the luxury. And Home Depot and Lowe's is a luxury store for people that want to like flip homes or remodel their homes or whatnot.
Hey, it looks good to me, man. You know, I'm hoping they come down. That's probably one of the recession stocks. I'm sorry I didn't buy Home Depot during the panic sell-off in March of 2020.
Yeah.
You know, I was too busy buying other stuff.
You didn't go wrong with whatever you bought in March and April.
No, nah, I wish I would have bought some other stuff, but I do remember Pepsi at, I think it was right around $100, and I should have bought it then. But if anybody, there's 8 people still watching. If any of you ate, you know, he's a smash. Ryan, he said Black Flag did he got me excited, man. We were talking some punk rock. Yeah, I like him.
I don't know punk rock at all, so
that's my I don't know. That's my wheelhouse. So punk rock is my circle of competence. Okay. That's my circle of musical competence. So if I was investing, I would go heavy into punk rock because I'm pretty familiar with at least a lot of the old bands. But like country or hip hop, you know, that's not really, that's like shorting stocks to me. It's not my circle of competence and confidence.
Oh, I mean, I'm a 90s kid, so I'm a big NSYNC and Hanson and Backstreet Boys. And
boy, look at this guy. Look at this guy.
Just a joke.
Here, Ryan. It's April Fool's Day. It's too late for jokes. Anyway, I like that video, man. He says, do we see a serious correction or crash coming soon? Well, we started off the video talking about I guess we'll come full circle here. The yield curve inversion that the 2-year did invert with the 10, or is it the 10 with the 2? How do you say that?
One of the same. I think it's 210. I think it's the 210.
So I think if it's the 10 inverts with the 2, right? So the 10 is crossing down below the 2, or the 2 is going up. I'm confusing myself. My brain's about ready to clock out for the evening here. Whatever it is, the 2 and 10-year yield curve inverted, and like we were saying, virtually 100% of the time within the next, it could be a month, it could be a year, but relatively soon. What do you think it's safe to say within the next 2 years? Maybe?
I feel like I've read about, or anyway, I learned about this. So I started working in the finance field in 2008. So I really started learning about this. And I think it was like 12 to 18 months, if I could remember correctly, or 9 to 18 months. So
we'll call it 18 months. It's almost a certainty that a recession 100% of the time has happened. So chances are a recession is coming, but we don't know when, we don't know how deep. And unfortunately, and how do you know if that's my problem? I don't want to be stuck waiting for the bottom, because how do you know when the bottom's there? It's not like somebody's ringing a bell telling you that the bottom's here. You have to kind of guess and get lucky.
So to answer his question, I think it's proven to happen 100% of the time when this happens, right? With that being said, do I think it's going to happen soon? No, I think we could have a good year for the rest of the year. However, I would probably start trimming in late December, early January, just in case something like this does happen. Because 9 months from now is it at the end of the year, and then 18 months from now is next June.
I think the year is going to be volatile. I think we're going to have big ups and big downs. I don't think it's going to be that straight step up that we've been used to seeing. So, and that's good for a lot of us investors. And if you do a little trading, like volatility, you can make a killing when there's a lot of volatility.
Well, let's make it clear too. If a recession happens, guys, and you're positioned correctly, that is where you start to create like massive amount of money and legacy money.
Absolutely.
And if it wasn't for 2008, if it wasn't for, I think in 2015, I made a ton of money when the market dropped. In 2018, at the end of the year, and then most recently, 2019 or 2020, when the virus happened. Like, that's where you literally can make so much money. Like, it's absolutely insane. So recessions are really, really great for people that are ready for them. So
yeah, and see, my problem, well, not problem, but when the last, 07, 09, whatever the time frame was, I was just investing through my work into my retirement, and I think I was doing like 4% of my paycheck. And we've talked about this. That's why I say I'm making up for lost time, because so many years it just was on autopilot. For some reason, I had 4%, and that's all that was going, and it was just into mutual funds. So thankfully, there's still something, but now it's, I'm going hard. Oh, here we go. We got a, here we go. Oh, I'm losing it. Where'd it go? Clifford. I don't want to say the big raw dog. Yeah, 100% of recessions had an inversion 12 to 18 months prior. And 50% of inversions had a recession later. So, yeah, so basically this is saying in the next 12 to 18 months, there's going to be a recession. And I'll tell you when the recession's going to start. I already know. It's when this guy right here drops the last of my dry powder, then the recession will start. Guaranteed 100% of the time. That's what happens.
That's a guarantee for all of us out there.
Yeah, so everybody stay tuned, and I'll let you know when all my dry powder's out. All right, well, a couple more of these, and then we'll pop on out of here. I like to keep it around an hour. We don't want to. Oh, he did. He bought Smuckers. And he bought 3 shares at $133. Yay! I wish I had a soundboard or something like cheering or. Yeah, Smuckers. I was just in the Pepperidge Farm outlet in Pleasant Prairie, Wisconsin yesterday, supporting your shares of Smuckers because they own Pepperidge Farm, I believe. And it's as soon as I say that, I'm like, are you sure? So I'm pretty sure. And he added, let's see what else he's buying. I love hearing what people are buying. 4 shares of Kellogg's, as he was down on that. Yeah, Kellogg's, I own that in the in our self-directed IRA. Just super boring company, one of the most boring companies. But hey, when I go into my pantry here, my kids with all the Kellogg's cereals. And then he bought 4 shares of teas. Everybody, welcome to the club. Everyone's down on tea. And I usually say I'm drinking the stanky Kool-Aid, I guess, but yeah, that spinoff's happening. You don't own any AT&T?
Bro, I used to own so much AT&T. So I owned enough AT&T. I got about $4,500 quarterly dividends from AT&T. However, I sold out completely when in April, I think it was March or April of 2020, because they got hit just like every other stock, but they didn't get hit as significantly as a ton of other stocks. So I sold completely out of T, and I started buying like higher growth, high quality stocks at that time. So I was lucky. Looking at it now, I was lucky to get out when I did, because T has been spanked pretty bad.
Oh, and how? And I think that we're at a bottom, and when there's certainty, once the spinoff happens and Warner Brothers shares are out there and completely separated from the company. I've done a lot of videos, a lot of content on AT&T, and again, I may be wrong on this, but I like where they're going. I like what management is saying. I've looked into them quite a bit, and they should be still paying about a 6% yield after Warner Brothers Discovery, after the spinoff. So,
and what are they at right now? Like $22 or something like that?
They're about 23, almost 24.
So
I think
once they get
high 23.
Like, I haven't looked at it in months. But once they get to the 26 to 28 range is like more like that's a key level, right?
Well, they're not going to get back there for a while, because as soon as they spin off Warner Discovery, which WBD, they're expecting analysts that it's going to be about $6 to $7 a share. So that comes out kind of like a dividend, when they spin off. So if AT&T is at $23,
Sure.
you're going to subtract that $6, $7. So that's why with their current yield, I think it's like $1.13 per year is the new yield. They've already reduced that dividend. I call it a right sizing, but it is a dividend cut because they're losing all of the revenue from Warner Media. But yeah, that's yeah. All right. Well, Ryan says next year will be interesting to watch for T. And hey, maybe if you're around, Ryan, next Sunday, the three of us, we can jump on. I was joking with Joe. I'd like to try it with three guys. So
I told you not to say
that. But yeah, because I can do on this restream up to six people because it's the free restream. So I definitely want to have the three of us just talk to everybody. We'll figure something to talk about, and then it'll be easier on us. I won't have to flap my gums constantly. So anyway, we're at an hour. What do you think, man? Think we should end it?
I think you're really good at flapping those gums. So.
God. And the funny thing is I'm super introverted, and I don't know if you might not believe it, but I am very, very introverted. Here he says, you heard it here, everybody. He promised. He thinks he should be around next weekend. So, well, we'll set that up, and I'll, I guess we can host it here unless one of you guys wants to host it on your channel. I really don't care. And we'll look at that. So
if y'all want to do
thank you.
Do a live stream.
What's up?
If you want to do a live stream, you guys can come over to my house and we can do it that way too.
Colorado, man. My mom lives in Laramie, Wyoming, so I can knock two birds out with one stone.
Do you know where?
Sorry,
do you know where Ryan lives?
He lives in Sacramento or somewhere near. Should I be saying?
I'm in the middle. I'm in the middle.
I hope it's okay. I said that, Ryan.
Sacramento's a huge city. You're okay.
Yeah. Do you know where he lives? Yeah, I think it's 126 Main Street, and
Social security number is 091.
Sunbreeze. I have not seen your name, Sunbreeze, around these parts. I don't know if you're one of Joe's guys or what, or just swinging on in. But I'm glad you enjoyed it. And I don't know how to end these things. Because I could just do the telethon style and keep going, but I guess we'll end it. I'll hit the end stream button here in a second. And thank you, everybody. We'll be chatting with you. Make sure to check out Joe's channel. You want to plug anything? Plug yourself. Plug something in a wall. I don't know.
I'd love for you guys to come over, check me out. I talk about all things finance, and I try to help everybody try to make as much money as possible in a short amount of time. And I am very transparent. I have 2 active public brokerage accounts. So I show you guys what I'm buying, what I'm selling, and then if it's good, bad, or ugly every single month. So I back up with what I say and I show you guys. Because if a YouTuber says something and doesn't necessarily show it, is it true? Maybe not, but I like to at least show it and be transparent with everything I do. So check me out, Rad Dad Investor. I'd love to see you guys over there.
You're not pushing that tattooed chef?
I do, bro. Nope, not touching it. Not touching it. Not at all.
All right. Well, I don't know. I guess we'll end this thing, everybody. So I don't have a little box next to my head to point something out. That's what I do at the end of the video. The little box next to my head. So, all right, here we go. We're ending this now, everybody.
All right.
Thank you.
Thanks, guys.
I salute.